I think I read the last couple of days that first quarter growth, excuse me, had been readjusted to 1.4%. Does that sound right?
Yes.
Yeah. If you had unfettered discretion, what would you do to improve on that?
Well, growth is variable from quarter to quarter, and we expect significantly stronger growth in the second quarter. So I would certainly, in looking at the performance of the economy, smooth through the volatility. But doing that, we have an economy that is grown over the last number of years by about 2% per year. And 2% has been sufficient to create a very large number of jobs and a tighter labor market. Of course, it's good to have more jobs and a tighter labor market, but the fact that that could be accomplished with 2% economic growth points to what is very disappointing, namely the potential of the U.S. economy to grow is very low. Most, I believe, CBO in our committee estimates that the economy's longer run potential to grow is currently under 2%.
Okay, but my question, Madam Chair, I apologize for interrupting. My question is, if you had unfettered discretion and we're averaging 2% growth, and you wanted to get as close to 3% as you could, which would be considered normal before 2008, if you had unfettered discretion, what would you do?
Well, this is really not a job for the Federal Reserve. It's a job for Congress and the administration.
No, I'm asking for your advice.
My advice would be to focus on all of those factors that determine productivity growth, and that pertains to tax reform and the efficiency with which the economy operates. I would focus on training, on education, the quality of human capital in this economy. I would focus on investment, both public and private. I would focus on policies that impact the pace of technological change and research and development. And there are a wide range of policies that bear on everything in my list. And so it's that set of channels that I think is important in boosting the economy's potential to grow.
Okay. Did we make a mistake moving away from Glass-Steagall?
I don't believe that Glass-Steagall was responsible for the financial crisis. So I don't see that as a major issue that was responsible for the financial difficulties.
Did our move away from it contribute at all, or was it just irrelevant in your judgment?
Well, look, the largest distress was suffered at standalone investment banks like Bear Stearns and Lehman that that was a product of Glass-Steagall. The fact that those investment banks are now, all major investment banks are part of bank holding companies and subject to stronger capital regulation is an important safeguard.
Okay. Has the Volker Rule worked?
The Volker Rule was designed to stop proprietary trading in banking organizations. That's a goal with which I agree, and it was intended to permit market making. The implementation of it has been very complex and burdensome. We've suggested that community banks be exempt from it entirely, and
should we get rid of it?
I wouldn't get rid of it. I think and I believe the Treasury report suggests maintaining the restriction on proprietary trading and depository institutions. So I wouldn't get rid of it, but I would look for ways to simplify it.
Okay. Last question, quickly. Would you accept a reappointment?
Excuse me?
Would you accept a reappointment as chair?
So it's something that I really don't have anything to say about at this time. I'm really focused on carrying out the responsibilities that Congress has assigned to us, and haven't really decided that issue.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.